Across the country, millions of people are paying closer attention than ever to news about government assistance, economic relief, and possible financial support programs. Rising costs have made everyday life more difficult, especially for seniors, retirees, and individuals living on fixed incomes. Groceries cost more than they did just a few years ago, gas prices fluctuate unpredictably, medical bills continue to rise, and housing costs remain a major concern. In moments like these, it's natural for people to look for reassurance, clarity, and reliable information about what help may be available and how government systems work when financial relief is introduced. Why government payments take time. Whenever discussions arise about new government payments or financial assistance, it's important to understand how complex the process really is. Before any payment can be issued, systems must be updated. Funding must be approved through official legislative or administrative channels. Eligibility rules must be finalized, and agencies must ensure that payment methods are accurate and secure. This is why legitimate government programs are rarely announced overnight and never implemented without a clear paper trail. Silence or limited communication during early stages does not necessarily mean secrecy. It usually means that agencies are working behind the scenes to prevent errors, fraud, and confusion. Who government relief programs usually focus on. Historically, when financial relief programs are introduced, they are often designed to help people who are most vulnerable to economic pressure. This typically includes seniors, retirees, individuals receiving Social Security retirement benefits, Social Security disability insurance, supplemental security income, veterans benefits, and Railroad Retirement Board benefits. These groups are often prioritized because they rely on fixed or limited incomes that do not always keep pace with inflation. While not every program applies to every individual, these benefit categories are commonly used as a starting point for eligibility when relief measures are discussed or enacted. Understanding eligibility without assumptions. One of the most important things to remember is that eligibility for any government payment is never automatic for everyone. Each program has specific requirements that may include age, income level, filing status, benefit type, and residency. Even when someone receives federal benefits, additional criteria often apply. Income thresholds are frequently used to determine who qualifies and how much assistance they may receive, and those thresholds are typically based on adjusted gross income from recent tax returns or official benefit records. Assuming eligibility without checking official guidance can lead to disappointment and confusion. How income thresholds usually work. When government assistance programs use income limits, they are generally structured to provide the most help to those with the least income. Individuals with lower adjusted gross income may qualify for the maximum benefit, while those with higher income may receive reduced amounts or no payment at all. For married couples who file jointly, income thresholds are typically higher than for single filers, reflecting shared household expenses. Head of household filers often fall somewhere in between. These thresholds are not arbitrary. They are designed to balance fairness, budget constraints, and economic impact. Why seniors and benefit recipients often receive special consideration. In many relief programs, lawmakers recognize that seniors and benefit recipients face unique financial challenges. Fixed incomes often do not rise as quickly as real-world expenses, even when cost of living adjustments are applied. Medical costs, prescription medications, mobility needs, and housing expenses can consume a large portion of monthly income. Because of this, some programs include supplemental provisions or additional calculations for people receiving federal benefits, acknowledging that their financial flexibility is limited compared to wage earners who can seek higher pay or additional work. The emotional weight of financial stress. For many older Americans, financial stress is not just about numbers on a bank statement. It affects sleep, mental health, relationships, and a sense of security. Choosing between prescriptions and groceries, delaying necessary medical care, or worrying about utility bills during extreme weather are realities that no one should have to face after a lifetime of work. This is why conversations about relief programs resonate so deeply. They represent not just money, but dignity, stability, and peace of mind for people who have contributed to society for decades. How government payments are typically delivered. When legitimate government payments are issued, they are delivered using existing systems whenever possible. Direct deposit is the most common and fastest method for people who already receive benefits electronically. Paper checks are used for those who do not have direct deposit set up, and prepaid benefit cards are used for individuals enrolled in specific programs. The government does not invent new delivery systems for each payment. It relies on infrastructure that has already been tested and used for years to reduce errors and delays. Why timing can vary. Even when payments are authorized, the timing of when funds appear can vary. Banks process deposits on different schedules, and availability of funds depends on individual bank policies. Some institutions make funds available immediately, while others may place a brief hold. Paper checks take longer due to printing, mailing, and postal delivery times. Delays do not necessarily mean a problem exists, and patience is often required when large-scale payments are distributed to millions of people at once. Keeping your information updated. One of the most common causes of delayed or missed payments is outdated information. Changes in bank accounts, mailing addresses, or personal details must be reported directly to the agency responsible for issuing benefits. Updating information with the Postal Service or a bank alone is not enough, as government agencies do not automatically receive those updates. Ensuring that records are current can prevent payments from being returned, misdirected, or significantly delayed. What happens if information is outdated? If a direct deposit is sent to a closed account, it is usually returned to the Treasury, which then attempts to reissue the payment by another method, often by paper check. This process can take weeks or even months. If a mailing address is outdated, checks may be delayed, forwarded, or lost entirely. These situations can be stressful and time-consuming to resolve, which is why proactive updates are so important whenever personal circumstances change. Married couples and household considerations. In many government programs, payments are calculated on an individual basis, even for married couples. This means each person's eligibility is evaluated separately, though income thresholds for joint filers are based on combined income. In some cases, one spouse may qualify for assistance while the other does not, depending on benefit status and income. Understanding how household income and filing status affect eligibility can help set realistic expectations and avoid misunderstandings. Dependents and additional support. Some relief programs include provisions for dependents, recognizing that supporting others adds financial strain. These provisions may apply to children, individuals with disabilities, or other dependents claimed on a tax return. However, rules surrounding dependents can be complex, and being claimed as a dependent may affect whether an individual receives a payment directly or whether the supporting taxpayer receives an adjusted amount instead. Reviewing dependency status carefully is essential when evaluating eligibility. Non-filers and benefit records. Not everyone is required to file a tax return, particularly seniors whose income comes primarily from Social Security or SSI. In many programs, benefit records are used to identify eligible individuals who do not file taxes. This means non-filers are often included automatically without needing to submit additional paperwork. However, it is still important that benefit records are accurate and up to date to ensure correct processing. Changes in financial circumstances. Government agencies rely on the most recent information available, which may not always reflect current circumstances. Retirement, job loss, new benefit enrollment, or changes in household composition may not be immediately visible in government systems. In some cases, filing a recent tax return or contacting the relevant agency can help ensure that eligibility determinations are based on accurate, current information rather than outdated records. Being proactive without panic. Staying informed does not mean rushing into action or reacting to unverified claims. Reliable information comes from official government websites, direct communications from agencies, and established news sources. Taking calm, deliberate steps to verify information, update records, and understand eligibility rules is far more effective than reacting to rumors or sensational headlines. The reality of scams. During relief discussions. Unfortunately, whenever there is widespread discussion about government payments, scammers become more active. Fraudsters often exploit fear, urgency, and confusion, targeting seniors and benefit recipients in particular. These scams can come in the form of phone calls, emails, text messages, or even mailed letters that appear official at first glance. Understanding how legitimate agencies communicate is one of the best defenses against fraud. How legitimate agencies communicate. Government agencies do not initiate contact by phone, email, or text to request sensitive information. They do not ask for social security numbers, bank details, passwords, or payment in exchange for releasing funds. They do not require fees, gift cards, wire transfers, or cryptocurrency payments. Any message that claims otherwise should be treated as fraudulent and ignored. Protecting yourself and loved ones. If you receive a suspicious communication, do not respond, click links, or provide information. Instead, contact the relevant agency directly using a verified phone number or official website. Talking openly with family members, especially elderly relatives, about common scam tactics can also help prevent financial loss and emotional distress. Awareness is a powerful form of protection. Financial relief is about more than money. At its core, government assistance is meant to provide stability, reassurance, and dignity during challenging times. For seniors and retirees, it represents acknowledgement of a lifetime of contribution and a commitment to basic security. While no program is perfect and not every need can be met, understanding how these systems work empowers individuals to make informed decisions and avoid unnecessary stress. Staying grounded and informed. Economic uncertainty can make people vulnerable to false hope or fear-based messaging. Staying grounded means seeking verified information, asking questions, and remembering that legitimate programs are always accompanied by clear official guidance. Taking time to understand the process is far more valuable than reacting to urgency-driven claims that may not be accurate. A closing reflection. For millions of Americans, especially seniors and benefit recipients, financial security is not about excess or luxury. It is about peace of mind. It is about knowing that basic needs can be met without constant worry. By staying informed, keeping records updated, and protecting oneself from scams, individuals can navigate uncertain times with greater confidence. Relief, when it comes, should bring comfort, not confusion, and understanding. The system is the first step toward that sense of security.